Inflation is defined as a general increase in prices and fall in the purchasing value of money. That means the prices of essential goods and services are rising while our income many times remains the same. Unfortunately, in the US, we just experienced record high inflation, the highest we have seen in 30 years. With the Fed's rate hikes over the last year and a half, inflation is coming down now, but it's still not at healthy levels. Hi there, this is Harry Nima Segara with Nima Equity, and today we will talk about real estate investments and inflation. Here's the good news. You can use real estate as a hedge against inflation. The inflation impact on real estate investments is a positive one. Number one, housing prices. Along with everything else, housing prices rise with inflation. For owners, this means their properties will appreciate more quickly. In the last 2 years, property owners saw record highs in appreciation. Prices will eventually even out, but even then, owners can expect 5 to 8% increases to remain in many markets. Number two, mortgage payments. Fixed-rate mortgage payments don't change, but over time, the equity in the property grows. During inflationary periods, the properties appreciate at an increased rate, yet the mortgage monthly payment never changes. Rents on single-family homes have been rising over the last few years. CoreLogic reported that September 2021 data show a national rent increase of 10.2% year-over-year, for example. How is real estate a hedge against inflation? In most cases, investors are not only protected but actually benefit from inflation. Rental income increases, as I mentioned. With most investments like stocks, values decrease during an inflationary period. With real estate investments, however, home values and rental prices increase with high inflation. Having a place to live is a necessity, not a luxury. So even when prices are at an all-time high, people are unable to avoid the expense of viable housing. According to Forbes, the winning formula to profit as a real estate investor during an inflationary period is to tie a cash-flowing property to a long-term fixed interest rate debt. With a fixed-rate mortgage on your rental properties, inflation rises their rents, but the interest payments stay locked at the same low rates, resulting in an increase in cash flow from the property because of inflation. Rent increases are expected in commercial real estate leases too. There's typically a clause stating that the rent will increase at regular intervals or annually. As rent increases, the value of the property rises as well. If the rent increase outpaces inflation, investors' return is positive. As a result, real estate investors typically enjoy an acceleration of returns during periods of inflation. Take a look at this example. If you invest in a property with 10% down and inflation rises to 10%, you just double your down payment as well as double your equity in the property. At first, you may wonder how a 10% increase in profit benefits you if dollars are worth 10% less. Here's how it works. The debt on the mortgage is outsourced to the tenants. When you receive a higher return on your equity and you're leveraging the fixed interest on the bank's loan and the tenant's income, you ultimately come out ahead. Property scarcity. The price of real estate is partially driven by scarcity. It is especially true in metropolitan areas where population growth has created a limited supply of space. When demand is high and inventory is low, real estate investors are positively affected as long as prices increases outpace the rate of inflation. Property scarcity is at an all-time high in the US currently. Depending on which agency numbers you may use, we have a deficit of between 2 to 4 million homes in the US. This added to the decrease in construction permits because of the higher interest rates in the last year makes us believe the deficit will only increase in the next decade. How real estate compares to other investments. Real estate investing typically holds less risk than other investments, particularly the stock market, while continuing to deliver good returns and the opportunity to build wealth. For a broadly diversified portfolio, holding residential and commercial real estate is highly recommended. The higher returns gained from real estate investments can offset volatility and/or the lower returns from bonds and mutual funds during inflationary periods. The sustainability of real estate investing is, particularly during periods of inflation, one of the top reasons investors love real estate. According to Forbes, real estate has made more ordinary people wealthy than any other investment vehicle. Investing in real estate allows you to use debt to your advantage and continue to build wealth even in a poor financial climate. This is true regardless of whether you invest in single-family rentals, large syndications, or anything in between. In the description below, there's a link to join the Nima Equity Doctors Investing Club, where you will learn more about investing and real estate and how they can help you achieve your financial goals. Last but not least, help others find this video by giving it a thumbs up below. Want to hear more about real estate? Make sure you subscribe to our channel. Feel free to share with a friend or colleague while you're at it. I'm Harry Nima Segara with Nima Equity. Thank you so much for watching.